Okay, well, we also have Mr. Tulsian and Mayuresh joining into the conversation this afternoon. Mr. Tulsian, let me first start with a stock that we already discussed in the morning, but the extent of fall on Tata Motors today, 5% down following the management interaction on JLR. What do you think is a fresh negative trigger that the market is reading in, taking the stock below 300 now? Absolutely. Okay. That's one stock that's on the move. Let's also bring in Mayuresh into the conversation. Mayuresh, I'll take up, a different clutch of stocks. Some of the cement names are actually holding up in a weak market. There's been some talk of price hikes as well. Would you recommend buying anything within the cement pack?
Afternoon, Surabhi. So again, I think if you probably look at the cement sector as a whole, and if you divide the economy into four large zones, again, I think the south-based companies have clearly struggled, both in terms of sand mining issues and input costs actually plaguing their EBITDA per ton. On the other hand, I think the logical conclusion of passing through prices because of input cost push-throughs were a logical takeaway. But again, I think the volumes is something to be looked out for. I think specific players operating out of the central of the country, and again, I think catering to the north or the west and the eastern markets, in my opinion, should do well. Having said that, my own sense is that within the large caps, I think the whole recommendation on Ultratech still continues because of the strong delivery that it probably has done on volume fronts. How it will sweat the JP assets is clearly going to define the overall dynamics in terms of return ratios. But from a bottom-up approach, my own sense is that a stock like JK Lakshmi Cement is something that I'm finding it very, very interesting in terms of the captive power plant that they've put through the cost optimizations because of the conveyor belt like its Durg plant should obviously embed the EBITDA per ton in terms of the volumes as well. The volume growth should sustain over the next few quarters. Can it be sticky for cement companies? Absolutely yes, over the next 2 quarters with monsoons around. But the second half probably should reflect that with utilization levels actually picking up. But my opinion again is that one needs to be very, very specific. So I think within the mid-cap universe, JK Lakshmi Cement probably remains one of my top draws.
Okay.
One green island in an otherwise Red Sea has once again been the graphite twins. HEG still holding on to some 4.5% increase. Graphite India was also up. Mayuresh, obviously Jefferies is the big bull on graphite and these stocks. But do you concur? Would you advise buying either HEG or graphite even now?
Very difficult call, Surabhi. But again, I think the dynamics still in favor of these graphite producers. And going by the demand-supply dynamics, if you look at the EAF route, there's clearly a lot of scope of expansion because what the Chinese facilities have done in not just closing facilities to the tune of 150 million tons, they're probably extending that to around 155 million tons over the next 3 to 4 years. Having said that, I think the new EAF facilities that will probably come up in China, I think would be to the tune of around 66 NT. So there is a clear mismatch in terms of demand supply, at least from a medium-term perspective. The other perspective also is the availability of needle coke, which is a critical raw material required. Now, I think there have been adverse or certain reports which probably are saying that there might be some amount of constraints in probably supplying this. Therefore, the low-cost inventory that a lot of these players enjoyed, which was very, very evident, for example, in HEG's EBITDA margins of 63-64% for FY18, that will clearly start coming down because I think the next round of inventory will obviously be at a higher level. But again, I think the benefits that they probably derived in terms of cash flows with balance sheets getting cleaned up, cash-rich balance sheets, rather working capital constraints no longer there, and a large element in terms of their capacities working at almost 80-85% levels. I think if one goes by those assumptions, I think there is a sufficient amount of earnings story still left. But there are a lot of moving parts, as I said, in terms of valuations. Again, I think it's not that these stocks are awfully cheap. But yes, from a medium-term perspective, till all these circumstances play out, I think the dynamics are still working in favor of these graphite electromill. The realizations also have been extremely strong. So again, I think the earnings story might continue at least for the next 2 quarters.
Okay, Ms. Tulsian, how? Okay, Mayuresh, your thoughts on Idea Cellular after the kind of big decline that we've seen today?
Again, I think the news, Anuj, that is probably coming through is probably going to take a hit in terms of the near-term earnings for the stock. In terms of what can probably come through in terms of their merger, I think a lot of synergies have actually got built in terms of models that a lot of analysts have built through to the second half of FY19 running into FY20. So I think the benefits of almost 10,000, 11,000 crores probably built in at this point of time. The second element in terms of once the merger goes through, again I think is the kind of RMS share and the SMS share that one talks about. So I think with the capping of circles and the kind of expectations that one has in terms of both its data ARPUs actually remaining at lower levels because of the aggressive plans of Reliance Jio, I think the near-term cash flows are also going to remain tight. The third element also in terms of what can actually come through in terms of the try order is what you're probably hearing. I think that can have an incremental hit as well. And let's not forget, I think there are also some contingent liabilities that one is talking about. So for an idea in particular, I think the debt to EBITDA level is probably way higher than the other incumbent Bharti Airtel. So at around 8.5 times, Bharti Airtel at around 3.5 times. I think Airtel sufficiently looks, I think, well positioned, in fact, to run through, in fact, of this entire process of down trading of ARPUs and what we might witness in terms of constrained cash flows. So large element in terms of whether there is value of Idea at this price. I think there is value, but will it get affected in terms of cash flows? Will it get affected in terms of near-term earnings? It absolutely yes. So again, I think as a call in the sector, I had probably a pessimistic view on the sector as a whole, leaving aside Jio, whose dynamics probably are looking a tad bit better than what the other two are doing at this point of time.
Okay, all right. Let's take a quick break. On that note, we'll come back.